All right, Derrick, Oldensmith again from T3 Trading. How you doing today, Derrick?
I'm good. How you guys doing?
Good, good. So since the last time we've had you on, the Fed has cut interest rates. We have seen the market hit new all-time highs. Where do you stand? You know, what stocks, what sectors have you been primarily trading?
Sure. So I went on vacation for a couple of weeks, which was great, and I
Was it a
tuned
cruise?
out. No, not a cruise. I'm really not a cruise guy. I was in Japan for a couple of weeks,
Oh, that's
and
fun.
did my best to tune out of the market, and I reduced my positions to a pretty minimal amount. I didn't get to flat. I never get to flat, but I reduced my positions a lot after all the volatility in July and August. It was a great opportunity just to take a couple of weeks and disappear. But I came back right in time for the Fed, and we've been jumping in. Obviously, markets moved higher. S&P broke out to all-time highs. Fed cut by 50 basis points. I'm struggling to really believe in this rally, to be totally honest. The technicals are still bullish, and I'm a believer in technical analysis, so I am not trying to necessarily overly fight the trend or anything, but I'm struggling to really believe in this upside move for a couple of reasons. One, I almost think we should be higher if there was going to be real momentum coming in off this 50 basis point cut and the expectation of these future cuts. Sure, we broke out to new all-time highs on the Thursday, the day after the Fed, but it wasn't like a move that had a lot of conviction. We haven't been able to close on highs on any of these days. Yesterday was also a very muted trading session. And I think that the VIX should actually be much lower based on the degree of the up move that we've had. So I don't see the VIX really confirming it, and that's probably because there's a lot of big players out there who are buying some deep out of the money puts for insurance purposes and in front of the election and everything else. But I'm struggling to fully believe in this market, and we're in a period of time here that's very seasonally weak. So I've got longs on because the trend is my friend. The technicals are still pointing higher, but I'll be honest, being a little risk averse right now, and I'd have longs on, but I also have some shorts on, and I'm not trying to be 100% involved right now. I'm taking a little bit of a step back, and I'm curious to see if the SPYs can really lose like 565-ish where they broke out from. It could be a signal of a bigger upside false breakout that could lead to some lower price action. So that's where my head's at on the big picture right now.
I'm kind of with you, Derek. It's been a reluctant rally is what I would call it. We had the big pop, obviously, on the cut day, and then we gave it all back that day. And what happened was we had overseas markets really ripping, and then it kind of ripped us back up, and everybody's like, yeah, we do love it. It was just a shakeout. But now if you look at the IWM, which probably cares more about rates than anything else, it's leaking it away again here. So we know tech, has worked. You've got your Microsofts and Nvidias that have worked for a long time, but they've even paused here to a certain extent. We've got a couple stocks, Meta and Tesla, which are trying to hold up the market by themselves. Somebody I retweeted yesterday had like a thing with Meta holding up the whole market, and Meta's been a monster, and Tesla's been a monster as well. So you got two that have been holding it up. Amazon's been pretty good too. But Microsoft just kind of sitting here, not doing much. Apple's been meandering here for the better part of a month. So even the big dogs are taking a little pause here. But is this a pause, or do you think, again, you just gave your thoughts here, but do you think there's a case here where the markets can go higher, even though the market seems reluctant right now?
There's definitely a case where the markets can go higher, and I think that case is that the big funds are still fairly underinvested because of the big washouts that we had in August and September. All the data that I've seen have shown that the big funds and the CTAs are still relatively uninvested. So if we were to begin to really break up and confirm this up move, which I don't think has fully happened yet, there's a chance that a lot of real chasing has to come back in from underinvested funds and the CTAs who have to buy this market up. But we're not seeing that, at least not yet. There's no real confirmation. So I've been, like I said, trying to take a little bit of a step back, and I'm watching these levels. The longer we can hold up where we are or begin to break higher, the higher the probability that chasing comes in. At the same time, if we really begin to lose the levels that we've just broke out from, and I'm eyeing like SPY 563 to 565, then I think that becomes a signal that buying really wasn't there. And you pointed to a couple interesting names. Obviously, Meta has been on fire. It had the best of all the Mag 7 earnings reports, I thought, back at the beginning of August this summer. So Meta's been great. Tesla had a beautiful technical wedge breakout that has given some phenomenal continuation. But the other names haven't been there. Microsoft announced a $60 billion buyback a few days ago, and that marked the top. And you look at NVIDIA pushed the entire market higher back on September 11th. And since then, it's held this 120 resistance. It has not participated in the up move with the market at all post-Fed. And I'm looking at a support level here around this like 114, 115 in NVIDIA with some relative weakness these last several days. And I'm like, well, what happens if NVIDIA actually loses that level? For disclosure purposes, I do have a smallish short on NVIDIA right now, but
you're like the only person in the world short NVIDIA.
Yes, seriously. And
I've never seen anybody there's 48 analysts, I think, that cover the stock, and there's not one with a sell rating. That's a scary thought too.
It's been that way for a while, but the sell side analysts, all they do is chase price. But NVIDIA is wedging out, and if it really were to lose that 114, 115, that could be actually the catalyst that causes the S&P and the Nasdaq to lose those breakout levels. That could be a little bit of a bigger pullback. So just some of the things I'm paying attention to.
Derrick, when you're looking at these markets, and I know you came back from after your vacation and stuff, and you're looking at it, and you're right. Like it feels like we should just plow through 5,800 here, right? No resistance. It's got what the Fed wanted, but if you're trying to take long positions up here, especially if you just came back, it's hard because you've had like some jagged lows, we've had some spikes, and then the spikes come right back up. When you have this kind of like you want to be long, you kind of have the indecision. Do you go? You're not going to lean on last week's lows, right? That's so far down. Do you try and look like for a double bottom, to kind of lean on? Do you look at multiple closes in the same area? When you want to be long, but you just don't know what your appetite for risk is, how do you drill down on an entry and a potential exit?
Sure. So I pay attention to extension, and I pay attention to certain chart patterns that are what I call like trend continuation patterns. So if you rewind to Thursday of last week, we had a massive gap up post-Fed. And at highs that day, we didn't close on highs, but at highs that day, the market was pretty extended to the upside based on the way that I view extension. And if you look at there's another thing I like to pay attention to, which is a short-term tactical indicator that had us overcooked even on Thursday's close, and we closed off of highs. So Friday, then we had a little bit of a pullback. We had a downside tail, and we closed off lows. That Friday pivot low is your spot, especially when the ADMA catches up. So that candle, like if you look at the QQQ or even the SPY, that candle with that downside tail when the ADMA caught up to that low, I call that a continuation doji, or like a continuation hammer doji, and that's a trend continuation pattern. So that's the spot where on the pullback, buyers came in and said, all right, we're willing to defend this area. So for QQQ ETF, that's 478 spot 30. So that's the spot where buyers came in and said, all right, we're willing to come in and defend this market here. So that's the key spot. You can initially look to be long for trend continuation versus that QQQ 478.30, or the same level for the SPYs is basically 565 spot 17. And that's a spot you can initially lean long versus for continuation. The risk isn't too bad on that. And that's also the spot where if you lose it, I think it's signaling that you have a potential bigger problem. That's the key inflection point to pay attention to in this market right now, is last Friday's low.
What would you say, and I'll go to the S&P here. What would you say to like a perma bear, saying, wow, we came up to all-time highs in July here. Whew, we lost it, man. We came back up in late August, September, lost it. Now we're just back up here again in between those two zones. What an incredible selling area. Time to ring the register. Time to get short. How would you set that up, or what would you say to that person?
Sure. So first of all, any perma bears are probably out of the business by this point in the rally since 2010, which doesn't mean that you can't be tactically bearish. And that's kind of honestly where my head's at. So I would almost agree with someone who is tactically bearish. So the way that I like to approach markets is I like to take a fundamental perspective, what my viewpoint is based on all the data and all the information, but then I need to confirm that with the technicals. So I would somewhat describe myself, and I'm usually not this way. I tend to be an optimist. I tend to be a bull. It's probably because I started my proprietary trading career with T3 in 2010, and everyone knows what the market has broadly done from 2010 to 2024. So it's just my natural thought process to want to be bullish. Yet at certain periods of time, for the reasons that we were just describing, I do feel a little bit more tactically bearish than otherwise. However, feelings and thought process is one thing. I need the technicals to actually confirm that I'm right. Because if technicals don't confirm that the idea is right, then it doesn't matter. Everyone's wrong all the time in this business. It's part of it. And the way that people are successful or not successful isn't necessarily because their ideas are right or their ideas are wrong. It's how they handle things when their ideas are right, when their ideas are wrong. So you're right on your idea. Did you maximize your reward? You're wrong on your idea, which happens to everybody. Did you minimize your risk? That's the whole key to the business, I think. So right now I would describe myself as like fundamentally tactically bearish in like a short to medium run. But again, I'm still looking at a market that's pretty much sitting here at all-time highs that gave a very healthy pivot low last Friday. So to that person who wants to be tactically bearish, I would say, you know what, I agree with you, but let's let the market prove itself. You don't need to short the absolute top penny in the market in order to be able to make money if we are going to get a real pullback. So let's start by seeing if we lose Friday's low, if we lose the breakout levels that broke out, Thursday of last week, and then we can say to ourselves, okay, well, what type of downside retracement can we look at off of this? What type of potential reversal can we look at off this? And how do we best profit from it?
AB's on mute. The old Joel trick.
Oh,
That's not Dennis. Don't call it. You do
That's
it.
your trick. You do it once a show usually.
I'm not doing it. I'll go a steak dinner. I don't do it the rest of the week.
okay.
Okay. Joel bets on everything, Derek. Like, this is what he does.
Yes, I told you not to say that.
You go to a sports game with him. He's
Now you're getting in trouble.
Every 5
Now you're
minutes.
getting in trouble. Now you're getting in trouble.
You're saying I
Where's
should be
his
long
average going?
DraftKings.
Okay, he hits a base hit. Where's the average going? We're 5 games into the season. Is it going? I'm over under here. Bet on everything.
That one
I should be buying DraftKings. I'm always looking for the trade.
Oh yeah,
so.
Joel, keep that in business. There you go.
Bet all your
AB keeps that in business. Go AB.
So I was just what you were talking about, Derek, is staying tactically short, but what do you do if you're wrong? And I just wanted to use that in a tangible example here. So for your NVIDIA short, like, do you have a defined level that if NVIDIA runs to, you're out of the short? Do you have a level where you would add more if it keeps running, but you still think it's going to pull back? How do you just walk me through that trade real quick?
Sure. So I'm generally watching 120 on the upside and the 114 to 115 area on the downside. If I see us breaking lower with good volume confirmation as the market is also breaking lower, that might be a spot that I consider adding for downside momentum of a breakdown of this wedge that it's been building out. The flip side is if it breaks above 120, it's starting to look like that same wedge is actually breaking to the upside, and it's starting to prove that my idea is wrong. The way that I trade is that I tend to be very, very greedy with profits. I'm relatively risk averse when I first press the button and I first get involved in a trade. But if I'm up a lot of money in a trade, I will sometimes give back very significant amounts of money to potentially make more. So 120 is the spot where the market, if it breaks higher, where NVIDIA is beginning to tell me that the short idea is wrong. I'll probably still be in the money on my short if it breaks above 120, just because I've traded it pretty well. So you might not see me just auto buy stop out of the position on the break of 120, that just becomes a spot where I start to watch it super, super closely to try to see, is this just a quick blip in the radar where they're shaking people out to the upside and I've got enough, positive P&L where I can be a little bit patient and I can play with it. But if it's really breaking through that 120 and the volume confirmation is there and the market's breaking out and the performance chasing that we discussed looks like it's coming in, then I got to get out of the way on that short pretty quickly.
Would you use a closing basis? Because obviously, if you're trying to be a little bit more patient, because I'm looking at it and it poked its head over 120, went to 120.79. You haven't had a close over 120 since August 28th. Also on a relative strength basis, it's just not back up where the market when we had that August rally. So you like to use the close? You just kind of, okay, it broke through it intraday, I'll keep an eye on it. How do you
have to be a little bit careful using that sort of closing concept, especially if you have a lot of size, which I currently don't have a lot of size right now. But if you have a lot of size, you have to be worried about that closing concept, just because the way that NVIDIA has the ability to run, it could be breaking through that 120 and I'm like, all right, I'm going to wait for the close, and it closes at $127 and now I'm down, 5 figures in the trade, and I have a really big problem for myself, and I'm losing significantly more than I would otherwise. So I think it's definitely a function of your sizing in the trade. And for me with this one, I am light enough that I could use some sort of closing concept, but it's really not the way that I do it. So this is one of those tricky things because, as you guys know, I work with and I mentor a lot of traders, and I always have to balance being honest with people about what I do personally with my own trading versus telling people what I think the right thing to do is or the right way to trade is, because I got to be 100% honest. Those don't always coincide perfectly, and that's just because of whatever experience level, account size, ability to manage risk. So I always advocate for like newer traders, especially who are first getting involved in the business, and probably for most people, to use very hard stop losses. 120 is your level, have your stop loss in at 120, you get stopped out, you're out of the trade, reassess things. I think that's the right thing for the vast majority of traders to do. I actually relatively rarely at this point trade with very hard stops in my trading. I do, but I would say it's 25% of the time on my trades I have very hard stops. So for me, if I see this breakthrough 120, that 120 area, it's not necessarily going to be holding to the close, which could mean it rips $6 more against me. It's this crazy momentum stock that has the ability to move really big at certain times. It's more, what are all the other layers of probability that I pay attention to actually telling me in this moment? Because that's the more dynamic part of trading. Trading comes down to risk, reward, and probability of success. We all know that. Risk reward, for the most part, is relatively simple math. The more difficult dynamic part about it is the probability of success, because there are so many influencing factors on every trade that you get in, right? Very simply put, if I buy a stock and the market's moving higher, I have a higher probability of success than if I'm shorting a stock and the market's moving higher. That's just one example. So I want to see, as it's breaking through that 120, well, what does the market look like to me at this time? What does the volume look like to me at this time? What is the profile of the market dynamics at this time? Is everything now indicating to me that this is the breakout through 120 that's going to be similar to the Tesla move that we just had, or Tesla just broke out of this beautiful wedge. In some ways, it's almost a very similar pattern. Tesla broke out of this beautiful wedge and broke to the upside, and there was huge volume confirmation. And we know the way that stock is, where it can just go. In which case, I got to get out of this thing probably relatively quickly on the break of that 120. Or am I looking at this and, the market is upside extended and the market's not looking ripe for continuation right now, and the volume is not really there, and this just looks more like it's a quick kind of shake and bake to the upside to push people out, and I have enough of a P&L cushion in the trade where I don't need to be panicking on the tick of 120 that I'm down a boatload of money. I can kind of watch it and breathe with the stock a little bit.
And what if some analyst comes in right now and gives it like a super upgrade? Would you just like add a layer on the short side there, be a little bit contrarian, or would you wait for the technicals to show you when to add?
I would still wait for the technicals to show me when to add, but on that type of situation, I would really pay attention to what the reaction is, because I find that when you have like good news that occurs for a stock or for the market, and this is almost one of my bearish thought process for the market as a whole right now with the good news that we just had, when you don't get the reaction that you should get, if an analyst came out with a crazy upgrade right now with the most bullish comments ever, this thing should instantly be breaking through that 120 level. So I'm going to be paying attention to if that were to happen and it doesn't.
Reaction.
Right, because then that's a signal potentially for the other side.
Real quick here, Derek, we're running out of time, but I want to give you at least a second to talk about this ProDesk virtual trading floor. We have the link in the description. I'm going to throw it in the chat as well, or you can hit the QR code on the screen. What do people get when they sign up for that?
Sure. So the ProDesk virtual trading floor is what my team of professional traders has been using in lieu of our old physical trading floor ever since COVID hit. And for your audience, you have the opportunity to join us for the rest of the week. You can be part of my professional team of traders. We're doing a morning meeting every day, an afternoon meeting every day. We get news in there real time, large order option flow. It's a phenomenal resource, and I think it'll be a great opportunity to educate your listeners. Tomorrow, I'm speaking at the Market Minds conference here in downtown New York City, so I actually won't be in there tomorrow. But my partner, Patrick Hall, will be running the show and doing the meetings in my place, and he's phenomenal, and everybody's going to learn a lot from him tomorrow and hopefully from me the rest of the week.
Boom, there you have it. Well, Derrick Oldensmith from T3, thanks for hopping on Benzinga's pre-market prep with us today. We'll catch up with you soon, and good luck at that event tomorrow.
My pleasure, like always, guys. Thanks for having me.